Hi everyone, welcome to Business Education and Research. This video presents the meaning of dividend, the key issues of dividend payment, different types of dividend policies and the details of dividend paid by three leading Indian companies, namely Infosys, Maruthi Suzuki and HDFC Bank for 4 years period. The term dividend means a return, reward, cash or otherwise that a company gives to its shareholders. The company can pay dividend in the form of cash or stock, that is, stock dividend or bonus shares. The board of directors of the company determine the amount of dividend, the percentage of dividend to be paid to shareholders, and this decision should be approved by shareholders in the annual general meeting or special meeting. The board of directors consider various key issues before taking decision for dividend payment. The key issues considered are presented here. Let us see the key issues one by one. After deducting all expenses, provisions and corporate tax, the profit after tax is calculated and this profit after tax is considered for the dividend. Firstly, the preference shareholders will receive the dividend as per the agreed ratio and then the equity shareholders will get dividend. The percentage of dividend is determined by the board of directors on the face value of the share but not on the market value of the company. That is why the dividend yield ratio for companies with high market value is always very low. The dividend payments to both preference shareholders and equity shareholders is not compulsory. The company can skip dividend whenever it finds an attractive reinvestment opportunity or facing cash shortage or dividend tax is very high. The company will announce the record date to finalize the eligible shareholders to get the dividend. The shareholders who bought the shares on or before the record date will receive the dividend. The tax on dividend is deducted at source and the shareholder's bank account will be credited the dividend amount after the record date. There are different types of dividend policies adopted by companies. The major types of dividend policies are presented here. Let us see one by one. Under a stable dividend policy, a fixed percentage of profit available for equity shareholders is distributed as a dividend. Accordingly, the amount of dividend is fluctuating on the profitability of a company. Therefore, the shareholders can predict the percentage of dividend on profitability, but not the amount of profit. The regular dividend policy of a company involves paying a regular dividend every year, irrespective of the profit earned or loss suffered by the company. During the boom period, after paying a reasonable percentage of profit as dividend, the remaining amount is retained to maintain the dividend policy during loss-making years. This regular dividend policy ensures stability and investors' confidence. Under an irregular dividend policy, the board of directors of the company determine the percentage of dividend by considering various factors. The dividend percentage will fluctuate from period to period. It's very difficult to predict the amount of dividend. The liberal dividend policy adopted by companies by paying a higher proportion of their earnings per share as its profitability and liquidity are very high and the company is in the boom stage of its life cycle. The conservative dividend policy is adopted by companies by paying a very low proportion of their earning per share as its profitability and liquidity are not high and the company may be in its introduction or initial growth stage of its life cycle. Now let us see the examples of dividend paid by three leading Indian companies. Infosys Limited is in software industry which is listed in Indian stock market as well as Nasdaq stock market. It has global operations. Maruthi Suzuki Limited is a leading automobile companies in India with high market share, listed in Indian stock market, and they are selling their automobile products both in India as well as exporting to various countries. It is a leading company. And HDFC Bank Limited is a private sector banking company in India. It is listed in Indian stock market. At the same time, it is having a global presence also. It is listed in American stock market also. So these companies are paying very attractive dividend to shareholders. For example, the amount of dividend paid by Infosys Limited on the face value of 5 is 43.5 rupees during 2018. Similarly, in 2019 it was 21.50, March 2020 17.50, and March 2021 27, and March 2022 31. These are the total amount of dividend paid by company during that financial year, right? So sometimes the company may pay dividend 2 times or 3 times a year, called interim dividend and final dividend. So what is presented in this table is the total amount of dividend paid by these three companies during the financial year 2018, 19, 20, 21 and 22. Let us see. On the face value of 5, the amount of dividend, total amount of dividend received by shareholders is 43.50. It is an attractive dividend. The percentage of dividend paid by company on its face value is very attractive. But at the same time, if you see, the amount of dividend is highly fluctuating because of profitability and other conditions. So the amount of dividend decided and paid by company depends on various factors. So if you see the amount of dividend paid by Infosys over this period 2018 to 22 5 years period, it is highly fluctuating. And another point is that the percentage of dividend on face value may be high. If you calculate 43.5 as a return on 5 rupee investment, it is very high. But what is the market value? On an average during 2018, 19, 20, 21, 22, etc. On an average, the share price of the company ranging from 700 to 1500. It is fluctuating during various trading days. But anyway, the market value of the investment is around 1000, whereas the face value is only 10. So when you calculate this 43.50 on market value of 1000, the return on investment dividend yield ratio is very low. And same situations in the remaining companies like Maruthi, Suzuki as well as HDFC Bank. So in terms of dividend as a percentage on face value, or the amount of dividend received by shareholders on the face value of the share is very high. For example, Maruti Suzuki, the total amount of dividend is 80, whereas face value is only 5 in 2018. And in 2019, again same 80. 2020, the company paid a total dividend of 16, and it came down to 45, and again it is increased to 60 during 2022. Like Infosys, the amount of dividend paid by company to its shareholders is not stable, and it is highly fluctuating, maybe due to various factors considered by board of directors. Similarly, when come to the HDFC Bank also, during this period, 5 years period, the amount of dividend is highly fluctuating. For example, in 2020, the amount of dividend is 2 rupee 50 paisa, whereas in 2022, it is 15.50. So it is highly fluctuating over 5 years period. So from 2018 to 2019, the face value of the company was 2. The company splitted the share. The face value reduced to 1 in 2020. Same 1 is maintained as face value during 2021 and 22. Anyway, if you see the amount of dividend on face value, it is attractive return. But if you calculate the dividend on market value, it is very low dividend yield ratio. For example, in March 2022, during March 2022, the company paid 15 rupee 50 paise as dividend on face value of 1, meaning on 1 rupee investment, the shareholders are getting 15.50 as a return, very attractive return when you calculate dividend percentage on face value. But what is the market value of this share? For example, in 2022, on an average, over various number of trading days, the share price of HDFC Bank is more than 2000. So on 2000, you are getting a return of 15 rupee 50 paise. So if you calculate dividend yield ratio, it is very low. Whereas if you calculate dividend on face value, it is an attractive investment. So therefore, the dividend details paid by company, three companies, Infosys and Maruti Suzuki and HDFC Bank, over 5 years period from March 2018 to 22 indicate the dividend policy adopted by a well-established, professionally managed, highly stable, profitable company is also highly fluctuating. So the amount of dividend decided by board of directors is influenced by various factors. So profitability, the present conditions, the cash reserve, cash earning profit, and the reserve required for future activities, etc. will be considered. So therefore, the dividend basically paid by a company to shareholders as a return in the form of cash.